after the U.S. Supreme Court shut down his sweeping tariffs last Friday, stating that the president exceeded his authority when he imposed them. Many countries have described this as good news. There are challenges ahead, though, because President Donald Trump announced an increase in tariffs on all U.S. imports to 15%. So what does this mean for Thailand? If we look back at the previous trade deal between Thailand and the U.S., the United States stated it would maintain a 19% reciprocal tariff on imports from Thailand instead of 36%. In exchange, Thailand agreed to eliminate tariffs on 99% of imported goods from the U.S., covering a full range of industrial, food, and agricultural products. If the U.S. trade tariffs were shot down, this would have been good news, because that means Thailand would no longer be subject to the 19% tariff. Suddenly, though, trade barriers continued, as President Trump imposed a blanket tariff on all imports to the U.S. of 15%. Some Thai economists have already warned Thailand not to be too complacent because trade uncertainties remain. Chairman of the Federation of Thai Industries, Griangrai Tianukul, suggests that Thai exporters need to be less dependent on major markets like the U.S. and look for alternatives. He also stressed the importance of securing the FTAs with other countries to reduce the risks for Thai exporters.
ท่าทีของทรัมป์ยังไม่อ่อนข้อแต่ว่ายังไม่รู้ว่าจะมาในรูปแบบไหนซึ่งเราก็คงจะต้องคอยติดตามสถานการณ์อย่างใกล้ชิดแต่ท้ายสุดประเทศไทยเนี่ยก็คงจะต้องเดินหน้าในการที่จะดึงกระจายการแสวงหาตลาดใหม่ๆลดการพึ่งพาตลาดหลักๆเพียงในไม่กี่ประเทศเนี่ยไปสู่ประเทศที่ยังมีศักยภาพในทวีปอื่นในประเทศอื่นคือการเร่งเจรจา FTA เดินหน้าเจรจา FTA ให้มากที่สุดแล้วก็เปิดตลาดให้มากที่สุดเพื่อกระจายความเสี่ยงแล้วก็เรารู้อยู่แล้วว่าขณะนี้สถานการณ์ของโลกถึงแม้จะคลี่คลายแต่โลกการค้าของโลกและกติกาของโลกได้เปลี่ยนไปโดยสิ้นเชิงละ
The trade tariff will impact Thailand's economy in several key areas, such as exports, foreign direct investment, and the exchange rate. Thai economist Dr. Amonte Chawla of CIMB Thai says that the trade uncertainties could lead to lower exports, lower foreign direct investment, as investors will have to wait and see if the Trump administration imposes further tariffs, and also a stronger Thai baht if the US dollar weakens, which would eat into exporters' profits. Another concern he noted is the tariff on China, which could lead to more cheap Chinese goods being dumped into Thailand and other ASEAN markets. Therefore, he suggests that Thailand should diversify its export markets very quickly and strengthen anti-dumping measures and attract high-quality investment to reduce the impact of trade tariffs and maintain a long-term economic stability. And the sudden tariff increase definitely adds pressure on the Thai private sector. President of the Thai Chamber of Commerce and the Board of Trade, Pot Aram Watananon, identified three key issues. Firstly, there's the risk of increased production costs and reduced competitiveness of Thai products in the U.S. market. Secondly, the uncertainty over the U.S. trade and tariff policies will make it much harder for Thai exporters to conclude trade or investment deals. And thirdly, the tariff uncertainty will put pressure on investors to adjust the structure of supply chains and relocate their production bases. For these reasons, he urged the government to speed up trade negotiations with the United States, which would help the Thai private sector adjust their business plans and improve their competitiveness in the long term. Despite the challenges, Finance Minister Ekniti Nitithampraphat has expressed optimism. He believes that the new 15% tariff would benefit Thailand because it is lower than the 19% reciprocal tariff previously imposed. He has instructed the Commerce Ministry to speed up trade talks with the U.S. Trade Representative to preempt the risk of increased tariffs being imposed by the Trump administration, to pursue FTA talks with other countries, and to explore additional markets for Thai products. Meanwhile, the Commerce Minister Suphaji Suthampan previously mentioned that the trade talks with the U.S. will continue to maintain trade and investment relations and to ease the impact of this latest tariff measure on Thai exporters. Trade tariffs aside, there's still some good news regarding exports. Thailand's exports in January 2026 increased by 24.4% to 31.5 billion US dollars, or about 980 billion baht, which is the largest monthly increase in 4 years. The sharp increase is attributable to increased global demand for Thai electronic products. Thailand's major export markets for electronic and tech products include the US, China, the EU, and ASEAN member countries. These markets saw impressive growth of 27% for markets like the US, China, and Japan, 5% for the ASEAN market, as well as 22.7% for secondary markets. And the U.S. market expanded by 43%, continuing 28 months of consecutive increases. Major products include computers, accessories and spare parts, telephones and accessories, transformers and parts. At the same time, exports of jewelry and ornaments, rubber and clothing products have contracted.